All right, so you guys send us a mountain of stuff this week, huh? Looks like we're going deep on digital assets today.
Yeah, a lot of it focusing on Michael Saylor.
Well, he's certainly been making waves, that's for sure, especially in the Bitcoin world. And from what I've seen, he's got some pretty big ideas about how the U.S. can become a leader in this whole new digital economy.
Oh, yeah. He's definitely got a vision, a whole roadmap, actually.
Okay, so that's what we're diving into today, unpacking Michael Saylor's take on digital assets and what he thinks the U.S. needs to do to thrive in this digital age.
Sounds like a plan.
So where do we even begin with all this? I mean, where does Saylor even start categorizing all these different digital assets?
Well, one of the interesting things is that he doesn't just lump everything together as crypto.
Right.
He actually breaks digital assets down into 5 distinct categories.
5. Okay, so like a taxonomy of the digital world.
Exactly. Each one has its own unique characteristics and implications, which is really important to understand.
All right, so let's break it down then. What's the first category?
First up, we've got digital commodities.
Okay, digital commodities. What falls under that?
Think Bitcoin.
Bitcoin. Okay.
That's a prime example. No central issuer, just digital scarcity.
So what makes digital commodities different from other digital assets?
Think of it like this. Digital commodities are like the gold of the digital world.
Digital gold. I like that.
Their value comes from their limited supply and the underlying technology that guarantees that scarcity.
Okay, so like it's not like a company or a government is controlling how much Bitcoin is out there.
Exactly. It's decentralized. You own it outright, just like you would hold a piece of physical gold.
Right, right. But if it's all digital, does that make it harder to regulate? I mean, can governments even control something like Bitcoin?
That's a big question a lot of policymakers are wrestling with. The decentralized nature of these commodities
Yeah.
presents both challenges and opportunities. On the one hand, they're resistant to traditional forms of control, which some people see as a good thing, right?
Right.
But it also opens up these possibilities for innovation and financial inclusion that traditional systems haven't been able to really achieve.
Makes you wonder how this could change the entire financial landscape, really.
Oh, absolutely. It's a whole new frontier.
Okay, that's digital commodities. What's next on Saylor's list?
Next up, we have digital securities.
Digital securities. Okay, that sounds a bit more familiar, like something from Wall Street.
Exactly. They're essentially digital versions of those traditional financial instruments we're all used to, stocks, bonds, that sort of thing.
Right, so instead of a paper certificate for a share of a company, it's all digital.
Yeah, but it goes beyond just being digital. The key difference here is that they're using blockchain technology to really ramp up the transparency and efficiency.
So, like, what does that look like in practice?
Imagine a world where stock settlements happen instantaneously
Whoa.
and shareholder voting is totally secure, no chance of tampering.
Okay, that'd be a huge change.
Mm.
So it's not about getting rid of Wall Street, but maybe giving it a digital upgrade.
Exactly, using this new tech to make it work better.
Makes sense. All right, what's the next category? What else does Saylor have on his digital asset list?
Digital tokens.
Digital tokens. These seem a little more abstract to me.
Think of them like keys. Keys that unlock specific functions within a digital ecosystem.
Okay. So like a key to get into a website or something.
It could be. It's more about accessing services and platforms.
Yeah.
Let's say you have a token that gives you access to a decentralized cloud storage network.
Decentralized, so not controlled by one company.
Right. Instead of paying a monthly fee to, say, Google or Amazon, you hold a token that gives you access to that network.
Interesting. So you own a piece of the network.
In a way, yes. And it's not just about access. These tokens can also be used for governance, giving token holders a say in how the network is run.
Oh, so it's like a digital democracy. Token holders get to vote on things.
Exactly. It's a whole new model for digital ownership and participation.
All right, I think I'm starting to get it. So we've got digital commodities, digital securities, digital tokens. What's next?
Next, we have the one everyone's talking about, NFTs.
Ah, NFTs. Yeah, those seem to be everywhere these days, especially with all those crazy stories about digital apes selling for millions.
Right. Well, NFTs, or non-fungible tokens, are all about unique digital ownership. Imagine owning a piece of digital art that you know is the only one in existence.
Okay, I get the digital art part.
Yeah,
Couldn't someone just copy and paste that file? What makes the NFT unique?
that's where the technology comes in. Each NFT has a unique digital signature recorded on a blockchain, which acts as a permanent, tamper-proof record of ownership.
So it's like a digital certificate of authenticity.
Exactly. And it can be used for much more than just art. Think about owning a virtual collectible, a piece of digital real estate in a metaverse, or even things like event tickets.
Okay, but what if, say, the platform that's hosting that digital art shuts down, or the metaverse you bought land in goes bankrupt? Is your NFT still valuable?
That's the big question, isn't it?
Yeah.
And it really gets at the heart of the whole debate around how we value NFTs. The truth is, the value of an NFT is tied to, well, its perceived utility and the strength of the community behind it.
So even though the technology guarantees you own the digital asset, its long-term value depends on other things.
Right. Things that go beyond just the tech itself.
That makes sense. Okay, so we've got 4 categories down: digital commodities, digital securities, digital tokens, NFTs. What's the 5th and final category in Saylor's framework?
The 5th category is digital asset-backed tokens.
Digital asset-backed tokens.
That sounds like a mouthful.
It is, but it's basically a bridge between the traditional financial world and the digital world.
A bridge? How so?
Well, these tokens are essentially digital representations of real-world assets.
Like what kind of assets?
Think gold, oil, real estate, things like that.
Oh, so it's like having a digital deed to a property or a digital claim on a bar of gold. You got it. They bring together the benefits of blockchain, that transparency, the security, that potential for fractional ownership, with the stability of the underlying real-world assets.
I see. So could this make investing in those types of assets more accessible to more people?
That's the idea. By tokenizing these assets, you're potentially lowering the barriers to entry,
Yeah.
allowing for greater liquidity and fractional ownership, which can be really powerful.
Interesting. So you're saying someone who couldn't afford to buy a whole bar of gold could potentially invest in a fraction of one through a token.
Exactly. It opens up a lot of new possibilities.
Okay, so that's Saylor's breakdown of the digital asset landscape. 5 distinct categories, each with its own set of characteristics and potential implications. Pretty thorough. But he doesn't stop there, right? He goes on to outline some policy recommendations for the U.S.
That's right. He argues that the U.S. needs to establish a clear framework for how all of this works. Rules of the road, so to speak.
Okay, so like a legal and regulatory framework specifically for digital assets.
Precisely. He lays out 3 key pillars for this framework.
3 pillars. All right, let's hear them. What's the first pillar?
The first pillar is all about rights and responsibilities.
Rights and responsibilities.
Yeah.
For whom?
For everyone involved in the digital asset space. So that means issuers, exchanges, and most importantly, individual owners of digital assets like you and me.
So it's about creating a level playing field and making sure everyone knows the rules of the game.
That's a big part of it. It's also about protecting investors and, well, just ensuring the stability of the whole market.
Yeah, that makes sense. Kind of like the regulations we have for traditional financial markets.
Exactly. The challenge is striking that balance between regulation and innovation.
Because if the regulations are too strict, it could stifle the whole industry before it really gets going.
Exactly. It's a tough needle to thread.
I get it. So that's the first pillar, rights and responsibilities. What's the second pillar of Saylor's policy framework?
Second pillar, ethical conduct.
Ethical conduct. Well, that seems pretty straightforward.
It does, but it's also absolutely fundamental. Saylor argues that you can't have a healthy and sustainable market without it.
Okay, so break that down for me. What does ethical conduct look like in the world of digital assets?
It's about transparency, honesty, and fair play across the board. No scams, no hidden agendas, no manipulating the market for personal gain.
Yeah.
You know, we've seen a lot of hype and speculation in the digital asset space, but we've also seen some high-profile scams and scandals.
Yeah, for sure.
So building trust is absolutely essential if these digital assets are ever going to become mainstream.
Makes sense. People need to feel like the system is fair and that they're not going to get ripped off.
Exactly.
Okay, so we've got rights and responsibilities and ethical conduct. What's the third pillar?
The third pillar is accountability.
Accountability. So like making sure people are actually following the rules.
That's a big part of it. Saylor believes that everyone involved in this market should be held responsible for their actions.
Okay, but how do you actually enforce that?
Well, he argues that we need clear mechanisms for enforcement. That means having the ability to investigate and prosecute fraud, market manipulation, and any other unethical behavior.
So no more getting away with shady stuff just because it's a new technology. There have to be real consequences.
Precisely. Accountability is key to maintaining a level playing field and protecting everyone involved.
Okay, so those are Saylor's 3 pillars. Rights and responsibilities, ethical conduct, and accountability. It sounds like he really believes the U.S. has the potential to not just be a player in this digital asset revolution, but to lead it.
He does, and he lays out some pretty compelling arguments for why he thinks the U.S. is in such a strong position.
So what's his reasoning? What makes him think the U.S. can be the global leader in the digital asset space?
Well, he points to a few key factors. One is the strong legal framework we already have in place.
Okay, so we've got a solid foundation to build on.
Right. And then there's the robust financial market infrastructure.
Right. Wall Street, all that.
Exactly. We've got the experience and the expertise. And then there's the culture of innovation that's so deeply ingrained in the African DNA.
So he's basically saying that if the U.S. plays its cards right, it can create a digital asset ecosystem that attracts investment from all over the world.
That's the gist of it. He believes that the U.S. has the potential to become the global hub for this whole industry.
And by doing so, create jobs, stimulate economic growth, maybe even revitalize certain sectors.
Exactly. It's a pretty compelling vision.
It is, but not everyone agrees with him.
Of course not. Like with any bold vision, there are always critics.
So what are some of the counter-arguments? Why do some people think the U.S. shouldn't go all in on digital assets?
Well, some argue that it's just too risky, too volatile.
Because it's such a new and untested market.
Right. They say the potential downsides outweigh the potential benefits. Others worry about the environmental impact of things like Bitcoin mining, which can be very energy intensive.
Right, that's a whole other debate.
And then there are those who think the U.S. should focus on other priorities, like addressing income inequality or climate change.
Okay, so it's not a slam dunk. There are definitely valid concerns and competing priorities to consider.
Absolutely. It's a complex issue with no easy answers.
Well, one thing's for sure. Saylor has definitely sparked a conversation.
He has. Whether you agree with him or not, he's made people think about the future of finance and the role the U.S. will play in shaping that future.
Well said. We've covered a lot of ground today, from those 5 different categories of digital assets to Saylor's vision for the U.S. It's a lot to take in. But as always, the big question for you, our listeners, is this. What role do you see yourself playing in this new digital world? If Saylor's vision comes true, how will it impact your life? Something to think about, right?
Absolutely. Lots to ponder.
Thanks for joining us for another deep dive. We'll see you next time.